So right now, to call where the economy is going, one of the reasons why yields are going up, they're saying that the Fed's not going to lower interest rates. We're betting the opposite. We're saying Trump will do everything he can to keep his billionaire buddies and himself keep making all the dough that they can. And that means keeping the equity markets and the economy strong. And that means lower interest rates. And lower interest rates mean higher gold prices. So we remain very bullish on gold and very, very bullish on Bitcoin.
Gerald Celente is already predicting a doomsday scenario for 2025, warning that the US dollar will experience a significant collapse, which he believes will trigger an economic crash in the United States. Recent news highlights concerns over the fragility of the dollar as geopolitical tensions rise and inflation continues to outpace expectations. Celente also raises alarms about the potential for global conflict, asserting that World War III has already begun, with only a wildcard event needed to make it official. Celente further warns of the broader economic impact of U.S. monetary policy, particularly the lowering of interest rates. Inflation is expected to rise as rates decrease, further straining the fragile economy. The Federal Reserve, in response to persistent inflationary pressures, has indicated that it will slow down interest rate cuts in 2025, reducing the number of anticipated cuts from 4 to just 2. This cautious approach highlights the delicate balancing act policymakers must navigate, especially as inflation rates continue to exceed the Fed's 2% target. The potential for ongoing inflation is further complicated by the GOP's proposed tax cuts, expanded tariffs, and stricter immigration policies, which many economists fear could exacerbate inflationary pressures. These political developments contribute to the broader economic uncertainty, and there are concerns that such policies might reignite price pressures when the Fed attempts to stabilize the economy. Given these challenges, gold prices have become a crucial asset, as they typically rise when interest rates are lowered. With a predicted 75 basis point rate cut in 2024, gold prices could surge to $3,000 per ounce, with deeper cuts driving the price even higher to $3,080. We present the clips of Celente's insights from his recent interview. Before we continue to discuss this, please subscribe to our channel and activate the bell icon for timely updates.
What else? Gold's up $6, 2669. So still a golden year for gold. And the reason gold's going up, even though the dollar's strong, it's all in your trends journal. It's because the fear is going on around the globe on the economy and geopolitics. And crypto's down to 92,000. They're down, 10,000 from their high, but still way up. Bankruptcies in U.S. soared a 14-year high as rates bite. This is from the Financial Times. Not a word about this in the Wall Street Journal that I saw. Maybe I missed it, or the Toilet Paper Record, the New York Slime. Yeah. U.S. corporate bankruptcies hit their highest level in the aftermath of the global financial crisis, as elevated interest rates and weakened consumer demand punish struggling groups. Oh, no, everything's fine. Everything's fine. Oh, you know that guy, the mealy mouth, though, that everybody loves, they call him a libertarian. He's a piece of shit. He loves the war in Israel. He loves the genocide crap. This is again from the Financial Times. He merely slashes tariffs to bring down high prices. Slashes tariffs. Wait a minute. He's Trump's buddy. Trump's want high taxes. Oh, so now he's telling the Argentinian people, we're going to bring in more cheap products for you. That's right. So the manufacturing goes way down, wages go way down, but the products are cheap. Again, it's the opposite of what Trump is saying. And by the way, I agree with tariffs, and I agree with Trump on that. Because you go back, once upon a time, there was no such thing as income tax, stealing our money. They got the money from tariffs for the government. And as McKinley said, the president at the time, what do you want? Cheap products or high wages? And I believe in a self-sustaining economy. We have the human and natural resources to make the products in America. I want to get the prosciutto from Italy. I want to get that fine wine from France. But the other stuff we can make here. So just to point out the hypocrisy of this guy. UK long-term borrowing costs highest since 1998. The yield on the 30-year gilt touched 5.25% yesterday. They say the UK is in a period of stagflation. That is total bullshit. It's in dragflation. The economy's going down and inflation's going up. You're not allowed to say drag because you're gay. Gayflation. They're in gayflation. So right now, to call where the economy is going, one of the reasons why yields are going up, they're saying that the Fed's not going to lower interest rates. We're betting the opposite. We're saying Trump will do everything he can to keep his billionaire buddies and himself keep making all the dough that they can. And that means keeping the equity markets and the economy strong. And that means lower interest rates. And lower interest rates mean higher gold prices. So we remain very bullish on gold and very, very bullish on Bitcoin. And what we're saying is it's going into dragflation. The numbers came out today from India. Yeah, it was like the worst economic growth forecast like in 2 years. And this is the fifth largest economy. Then you take a look at France, the sixth. You take a look at the UK, the fifth, what is it, sixth? I get the numbers mixed up here. Let me see got to get the numbers right. Got them here in the economic update. We write all about it. From India, the fifth largest economy in the world, to China, the second largest, to Germany, the third, Japan, the fourth, the UK, number six, and France, number seven. Economic weakness, fears of recession, and or at best, moderate growth is the name of the global economic game. The United States is playing a whole different game than the rest of the world. We're still number one when it comes to that. But you got to look at the data, what's going on around the world. And that goes back to interest rates. They got to cut interest rates in other places around the world. And it's one big club, as George Carlin said, and you ain't in it. So the United States is in that club. They're not going to keep interest rates high, have the dollar soar while the rest of the currencies go down. So we believe under Trump, they're going to lower interest rates. And it's, again, the Trump is a wild card. We don't know what he's going to do on tariffs. Is he going to stick by them? Is he going to build the infrastructure like he says he's going to do? You know, there's a lot of ifs. So it's right now, again, we believe that it's a wild card that's going to be played. So it's very important to stay on top. And again, you want to read that article by Gregory Mannarino. And then, unfortunately, we go into other sections in your Trends Journal. Oh, again, dragflation is what I was going to talk about. The UK, they're saying it's stagflation. It's not. It's dragflation. The economy is going down and inflation's going up. And we see inflation keep going up. And what these shitheads never talk about, all the high taxes that we get. And that drives up inflation. But they don't talk about that. You like paying them school taxes. They never have any kids. The more kids you have, the more you should pay. Why do I got to pay for your kids? It's your decision. Great. Have as many as you want, but I don't want to pay for them. Here I am at my age, still paying school taxes.
A year ago, the possibility of a U.S. recession was a dominant concern. But as we approach 2025, the conversation around it has largely disappeared. While the absence of recession fears may seem reassuring, it should also serve as a cautionary signal. The U.S. economy has seen consistent GDP growth, surpassing 2% in 8 of the last 9 quarters. But experienced investors understand that overconfidence in unbroken growth can be a major red flag. If a recession occurs, markets may experience more severe volatility due to this risk being overlooked. President-elect Donald Trump's policy proposals are significant factors in this uncertain economic landscape, including reducing immigration, slashing government spending, cutting taxes, and imposing tariffs. While much of the investor focus has been on his agenda's pro-business aspects, such as deregulation and efforts to facilitate corporate growth, the potential downsides of these policies are often overlooked. Gerald Celente warns that the prevailing economic optimism may mask significant risks, leaving investors vulnerable. He points out that the economy has reached a point of constraint, meaning its potential for further growth is limited. Any disruption, whether from geopolitical tensions, market imbalances, or policy shifts, could trigger a rapid downturn. Celente emphasizes the need for caution, urging investors to look beyond the immediate benefits of current policies and consider the potential unforeseen consequences. Let's get back to Celente's interview.
The Dow was down, lost 178 points. S&P fell 1.11%, 1.11%, excuse me. And the NASDAQ was down almost 2%. So because of the high yields now on the treasuries, they say that's why Bitcoin's backing down. Bitcoin's at 97,000 a coin. It was up to about 102,000, but it's still strong. And we don't see that as a reason. We still forecast it's going. But even think about this, even with the high yields, hey, gold prices went up $12 today, $2,648 an ounce, $2,648. Again, gold's up some 27% since we made that forecast last year. And oil, Brent crude's going up. I guess the global warming trend reversed itself. And now it's cold in a lot of places on the planet. So demand is going up. Demand's going up there in China. And also now with the sanctions they're putting on Russia and more on Iran, there's a fear that there's going to be a slowdown in oil disruptions. That's driving prices up. And as we're warning, if Trump keeps saying what he's saying over here and ramps up the Israel war, particularly against Iran, you're going to see oil prices go to around $120, $130 a barrel for Brent crude. And that will crash the global economy and the global equity markets. And speaking about the equity markets and where they're going, you're going to want to read the article in your Trends Journal by Gregory Mannarino. Is it over for the stock market? 5 factors to play. And as we look at the equity markets, and as we write about in our economic update, there's no relationship between Wall Street and Main Street. For the year, the NASDAQ was up 28.6% last year. The S&P 500, 88% of which is owned by BlackRock, Vanguard, and State Street, in this place we're supposed to have called a democracy, went up 23% last year, and the Dow was up 13%. So there's no relationship between Wall Street and Main Street because, according to the December 23rd release by the Conference Board, consumer confidence was not sustained in December as the index dropped back to the middle of the range that has prevailed over the past 2 years. So Trump won because, as the saying goes, it's the economy, stupid. Some 40% of Americans who went to the poll, the people who voted, economy was number one. That was the top issue. So the people are getting hurt, but the markets are doing fine. You see what's going on here? The article by Gregory Mannarino sums up a lot of important information. So that's some of what you're getting in your Trends Journal. And again, no alcohol. No alcohol. Just eat shitty food. Hey, face, Murthy boy. Murthy, dirty Murthy. Look at, how can anybody be so ballless and gutless to swallow the shit coming out of this guy dressed up in his drag costume over here? How about all the microplastics? How about that, huh? How about all the GMO? How about all the forever chemicals that they keep killing us with? Dump it into everything around us, what we eat, what we wear, what we drink. Now, but you can't drink alcohol. And again, the hypocrisy of this. These faces close down everything, but leave liquor stores open because we're politicians and we tax the hell out of liquor. We make as much money as we can, just like we did with marijuana. Yeah, tax the hell out of it. Make it illegal, but tax the hell out of it and make it legal. A bunch of shitheads. And you got to be a shithead to swallow their shit. Don't forget to vote. Don't forget to vote. And again, consumer confidence was down in December. Delinquent credit card accounts are on the rise. Home sales, where they're going. This is very important. And again, going back to the Trump deal, this is part of we don't know what he's going to do. He says one thing, does another thing, does a thing, and says another thing. He goes back and forth on issues.
Many analysts and investors have been warning that while recession concerns in the U.S. have subsided, underlying risks persist. Despite consistent economic growth, experts caution that the economy may have reached a constraint where any external shock could trigger a swift downturn. In this environment, gold has emerged as a strong performer, continuing its upward momentum through 2024 and into 2025. This strength is attributed to a combination of global economic uncertainty and a growing shift away from the US dollar as the dominant reserve currency. After the US froze Russian assets in 2022, many countries began exploring alternatives, and gold, with its historical role as a reliable store of value, has increasingly become the asset of choice. As concerns over the US dollar's stability rise, gold's role as a safe haven has only strengthened, making it a key asset in today's uncertain economic landscape. How will the shift from the US dollar to gold impact global markets in 2025? If you found this message compelling and enjoyed the video, be sure to give it a thumbs up, share it with others, subscribe to our channel, and turn on post notifications for more thought-provoking content. Thanks for watching.